and very good morning to all our viewers. This is WION Wallet. I'm Sumit Chaturvedi. Let's see what is making headlines in the world of business this morning. India's Mahindra Group plans to invest $1 billion across business verticals in the US over the next 5 years. M&M to start auto plant in US soon and will step up local hiring for IT branch too. Indian central security agencies have raised concerns over the mega $13 billion takeover of SR Oil by Russian conglomerate. The proximity of port to Pakistan is the main problem. Uber shareholders and its board have discussed selling some of their stock to Masayoshi Son's SoftBank Group and other potential investors. And Indian markets have opened in green. Sensex above 32,000 mark. Nifty is also above 9,900 mark. And the first story is from Mahindra Group, where Mahindra Group is planning a massive US drive. Diversified Mahindra Group now plans to invest $1 billion across business verticals in the US over the next 5 years as it aims to double revenues from the American market to $5 billion. Mumbai headquartered group, which currently employs around 3,000 people in the country, also plans to double the headcount over the next 5 years as it looks to expand operations. The quantum of investment, however, would depend on various factors like market conditions and success of various projects that are currently underway in the US. The $19 billion group currently generates around $2.5 billion from its 7 business verticals in the US. Mahindra is also looking at doubling its manpower in the country over the next 5 years. And central security agencies have raised concerns over mega $13 billion takeover of SR Oil by a Russian consortium, citing the proximity of, we can say that, port to Pakistan and nearby assets, defense assets. The agencies have communicated to the Home Ministry about their security concerns over the deal. A final decision on the issue will be taken by the Prime Minister's office, as the deal considered to be one of the largest foreign investments in the country. It was signed in the presence of Prime Minister Narendra Modi and Russian President Putin on the sidelines of big summit held in Goa last year. According to government rules, it is mandatory to take security clearance from the Home Ministry for any foreign investment in the country. The deal covers, we can say that, SR Oil's 20 million ton refinery at Wadinar in Gujarat and its retail outlets, for which Russian consortium will pay $10.9 billion premium. Well, we can talk about the deal. The deal is around $13 billion of deal. It was between Russian company Rosneft and SR Energy. Central agencies, they have raised objections to this mega deal, which is one of the biggest FDIs in the US. Rosneft and SR, they had signed the deal last year in big summit. The deal was attended by PM Modi and Russian President both. First of all, the biggest obstacle is the nearby defense assets near the Wadinar port in Gujarat. That is creating the biggest hurdle as far as deal is concerned. That is the biggest trouble for the deal, SR and Rosneft deal. India and Russia, they have been involved in this deal. Both companies have close ties since the last many years, and that's why this deal is also important. It looks like some of the problems can emerge between the diplomatic relations too. Well, deal is one of the largest foreign investments in India. $13 billion is, yes, one of the biggest investments in India. At a time it's coming when PM Modi has invited everyone to invest in India. Also, the deal cover SR's 20 million ton refinery in Gujarat. It is one of the biggest refineries in the world, and Rosneft is buying the 20 million ton refinery. However, agencies have communicated security concerns over the deal because the port, Wadinar port, lies very close to some of the defense assets, as well as Pakistan is also in the proximity. A final decision, sources are telling, will be taken by PMO very soon. The Prime Minister's office will be taking a decision in this regard very soon. And we can say that the deal was signed last year in the presence of Prime Minister Modi and Russian President Vladimir Putin in Goa at BRICS summit last year. So security clearance is mandatory for such foreign investments, and it is not coming. That's why the deal could be in jeopardy. The deal could be in limbo. It's a massive deal, and the problems are also massive that are coming in the way of SR Rosneft deal. Moving on, let's talk about Indian markets. Indian markets that jumped massively last week. Sensex touched 32,000 points for the first time. Today also, they have been in green since morning. Sensex is around 32,000, above 32,000 mark since the morning today. They are in green, and Nifty is also above 9,900 mark since the morning today. So clearly a good Monday for investors and traders alike. I'm joined by my guest for today, Mr. Vivek Karwa, who is financial planner with the securities, to talk more on market. Good morning to Mr. Karwa. Again, one good day for the markets. How do you see the markets panning out today?
The market, in fact, the US market closed with green. The Indian markets have been green. So overall, it's a stable day today. And of course, the cautiousness is already prevalent in the market right now as the Nifty is nearing 10,000 levels. So with cautious thing in mind, the markets are trading green and waiting for correction, I should say. So overall, it's a positive bias.
And any sector-specific stocks that are moving the market? What sectors are really, we can say, the darlings of the stockbrokers?
See, today the focus has come back on the banking sector as such, because there are one positive sector and negative sector, both are mentioned. The positive is supposed to be banking, wherein people started focusing, investors started focusing on the sector again, and the market cautious on NBFC sector also. So stocks like AU Finance, stocks like Sumit housing finance companies have really touched the valuation of rooftop. So cautiousness over there, cautiousness actually, and banking people are looking with some positivity. And at this stress valuations, investors have also started looking at pharma. So pharma, after seeing all these bad things happening, it has started stabilized, and stocks have also started recovering. So I say if somebody really wants to take contrarian bets, I think banking and pharma should be good. And overall market, I'm not predicting a big cut as such. But if there is some negative happening anytime, 2,000-3,000 points on Sensex is not a big thing at all. After demonetization, we saw what happened. From 30,000 index, almost 28,000 index, it went to 23 and then recovered back. So such sharp things can happen. But the bias remains, the undertone remains positive, and hence on any day it is a buying opportunity. Just let's stay away from stocks which have really, the valuations have really become fraught.
All right, and Mr. Karwa, I would like to ask you about the global markets a bit. Where do they stand as of now, and what are your expectations for today?
In fact, global markets also are strong right now. Sumit, what is happening is there is real flush of liquidity, not just in Indian markets, across the globe. And that liquidity is actually keeping the markets on say, bull territory even now. So even in US, if you look at Dow Jones, it is not willing to come down. It is really strong. And even Europe is recovering. Asia is also recovering. So it's basically liquidity. And some of this liquidity has also started coming towards India now. And until now, FIIs were waiting for correction. Correction is just not coming in. And hence what will happen is there could be a time correction wherein the market goes into a lull slowly, because again, parliament session also is coming. So market would like to see that also. And even the result season is going on. So all these things could lead market to be in a range for some time. And that would start bringing FIIs also going forward.
All right. One last question to you would be a bit about sector specific. Auto sector is doing good. Well, do you think there is some steam left in auto sector? It can still be bought, or do you think all positives have been already accounted for in auto stocks?
Definitely, all positives have still been accounted for. In fact, the benefit of GST has still to percolate in. And in fact, there were reports of 4-5 days back wherein the trucks carrying the goods of from one part of the country to other part are now coming just in 3 days compared to earlier 6 days. So there is going to be a lot of savings in sector, and as this sector also becomes more of organized, I think transportation and logistics, the entire sector should continue doing well. So stocks like Tata Motors still look cheap to me. Even Mahindra and Mahindra looks cheap to me. Of course, Maruti is on the costlier side, so that could be avoided. But other stocks, there are valuations still available in market. That's the reason I'm saying. Though market is great, look at companies for say at fair valuations, even despite of this rally. So if you do that, I don't think you're going to regret it later, because end of the day, we'll make money.
All right, Mr. Karawa, thank you so much for getting us all these details as far as markets are concerned. Indian markets, once again, in positive territory. They have opened in green since morning. Nifty and Sensex both are green. Good news for traders. Good news to start the week. Moving on from markets to Air India. Profit-making Air India Express is preparing a 10-year vision document as it looks to expand its fleet and fly to more foreign destinations. Air India Express is the low-cost subsidiary of Air India that flies from India, especially to Gulf nation. It is in, we can say that profits, it is in positive territory, unlike Air India, which is in losses. The plan is being prepared amid the government's working on a roadmap for disinvestment in Air India, the debt-laden parent of low-cost carrier, which remains bullish on growth prospects. While the national carrier has been in the red for long, Air India Express remained in the black for the second consecutive year, posting rupees 296 crore profit in 2016 and 17. Air India Express has a fleet of 23 Boeing 737-800 NG aircraft, each having a seating capacity for 189 people. The airline would also be firming up its fleet strategy based on short-term and long-term priorities. It flies to 15 international destinations, including Dubai, Sharjah, Abu Dhabi, Ras Al Khaimah, Bahrain, Doha, Kuwait, Muscat, Singapore, Kuala Lumpur, Riyadh and Dhaka. Air India Express has 545 weekly departures and it flew 3.4 million passengers in 2016 and 17. Air India Express, which has been operationally profitable for the last 4 years, is clearly now going to expand. Let's talk about trade deficit. Trade deficit, which is the difference between imports and export, it has narrowed down in the case of India. A good news again coming from India. The trade deficit has narrowed down to $13 billion. Why has it happened? We will tell you. The deficit has narrowed down to $13 billion in the month of June. Again, good news for India. It's coming among many good news for Indian economy. Gold imports, the biggest import of India. India is the largest importer of gold in the whole world. The imports have nearly halved. They have come down by 50%, the gold imports, and that's why it looks like the deficit is in India's favor this time. The gold imports have declined to $2.45 billion worth of gold imports. Earlier, it was around $5 billion, and this June, it has come down to $2.45 billion worth of gold imports. Merchandise exports are up at 4.4%. The exports overall were up 4.4% at around $24 billion. That's why deficit, which is the difference between exports and imports, is in India's favor, because the exports are up at $24 billion. Clearly, one more positive news coming from India. The goods imports were up 19% at $36.52 billion. So goods imports were also up 19%, but gold imports have come down by 50%. That's a good news, because India is the largest importer of gold, and gold, if it comes down by half, it's clearly going to make trade in India's favor. That's why the deficit, we can say that, was in India's favor. The net deficit has narrowed down to $13 billion. Moving on and moving to some policy news from India, we can say that India is considering a proposal to lift a cap on investment by foreign retailers in local supermarkets. A meeting led by Prime Minister Modi may decide on a proposal to allow 100% investment by retailers such as Walmart and Carrefour if they agree to sell locally made products and invest at least $100 million. The move is a partial reversal of PM Modi's opposition to foreign retailers, as he attempts to create jobs even at the expense of alienating his core support base. Well, clearly there's opening up of FDI. It's coming because there was a meeting on last Friday that discussed a lot of issues, including opening of FDI in multi-brand retail as well. So clearly, if we move now and we move to another big story, it is opening up of Indian markets. There's new plan to allow foreign retailers with conditions. Foreign retailers are currently allowed in multi-brand retail, but single-brand retail, there is no permission for them. And more FDI will help create more jobs, more retail sector jobs. That is the whole intention behind allowing retail FDI in single-brand retail, and it can benefit Walmart stores, Carrefour. They can open retail stores here. Currently, they have multi-brand wholesale retail. So it is only possible to buy from wholesale in this store, but single brand retail will come. Retailers will have to agree to sell locally made products. There would be a quota where locally made products will be sold, and that is one of the conditions which would be put if they are allowed to come to India and sell their products through single brand retailing. The policy now permits up to 51% stake in multi-brand retail, and that's what is clearly not in favor of these big giants, and they will come when it's open fully. Retailers will have to invest at least $100 million. That is one of the conditions, that retailers will have to invest at least $100 million in India. That's when they'll be allowed clearly to set up more and more fully retail stores. Well, currently, wholesale retailing can be done, but not, we can say that the retailing which customers do can be done through these stores. But after this FDI regime is further opened, yes, they can be, we can say that, open more and more stores. Now, moving from retail to auto world, enthused over implementation of GST, Hyundai Motor is hopeful of auto sales growth doubling post-GST in India. Hyundai Motor has said industry can achieve 15% growth rate going forward. The company has also launched its third phase of Happy Move Save Our Heritage campaign that increases about, we can say that, all monuments, that aims to educate and sensitize people about country's rich heritage.
This is an area where we found that we could contribute as a global citizen. Because while they have so much of challenge with them and they're doing a phenomenal job, I think this is the area where a corporate world could come together in terms of bringing in the vision, in terms of bringing in the marketing, because we have the technology, we have the resources in terms of finances, and yes, we also have the mindset. Growth pre-GST was almost around 7 to 8% for the industry. I believe this could go to the level of almost double to 15%. And I think that's a big take. This will be a big boost for the Indian economy, especially even contributed by the auto industry, which almost contributes 6% of the GDP.
With this, it is time for a short break on WION Wallet. After the break, we will continue with coverage of more stories, both Indian and global. Stay tuned to WION. Welcome back to WION after the break, and now move to IT sector in India, which is so far enjoyed the position of most placed in the job market, has suddenly lost its sheen. Blame it on Trump's administration, which has asked IT firms to locally hire and now to import techies in the US. It is not enough to top up its automation that will eat up the manual IT job market in next 5 years. With all these issues playing spoilsport, the ultimate victims are techies who were until now well settled and living a good life. And with job security gone for a toss, there have been reports of suicides across the country. Last week, a techie in Pune, having lost his job, jumped to his death. Tech Mahindra has also fired an employee, giving 24-hour notice and online counseling platform. You are those told other people that distress calls have gone up since last few months. They've also launched Fired to Fired Up in June to deal with surge in distress calls. So clearly NGOs are coming in the front. It has received 260 odd calls and 800 chats last month, while the maximum number of callers was from Bangalore. Given the Silicon Valley status of the place, Maharashtra, Delhi, Odisha and Himachal Pradesh also had large number of callers seeking help. Finding no other way, the companies are also seeking psychological help for their employees. And Chinese media has suggested that its government to devise a new strategy to counter India's growing manufacturing sector. An article in a Chinese state-run newspaper said that India is receiving a massive influx of foreign investment, which will enable it to considerably enhance its manufacturing capacity. The newspaper advised Chinese government to keep calm and develop a new growth strategy to cope with competition from India. The article noted that foreign investment in Indian initiatives like Make in India is a repeat of China's introduction of foreign investment, which is why India may succeed. With this, it is time to say goodbye to all Wallet viewers. For more news and updates, stay tuned to WION, and thanks for watching us.